On today's episode,
always when you see disruption, you have many forces at work converging to kind of create this disruption. When a disruption comes away, you have an opportunity to enter the market and to change the dynamic of the markets. I think it's a very exciting period of time when everything's kind of up in the air and possible.
welcome to the Active Share podcast that explores less obvious investing insights in a world that's always changing. I'm your host, Hugo Scott-Gall. Today, I'm delighted to introduce Marie-Ann Wachtmeister, co-founder and creative director of Courbet, a Parisian fine jewelry company. Marie-Ann started her career as a marketing manager at Procter & Gamble, followed by a spell at McKinsey. Her entrepreneurial ventures are marked by founding a telecom company and even a school. Marie-Ann, it is a pleasure to have you with us. Thank you for coming on the show.
Well, thank you for having me.
You're our first disruptive entrepreneur in the luxury goods space on the show, so it's very exciting. So thinking about that word entrepreneurial, can we talk a little bit about your career path, how you got here, what made you want to become an entrepreneur? Because as I said in the intro, you had impressive jobs at Procter & Gamble, you worked at McKinsey. Those are great companies to work for, but they're not necessarily a stepping stone for entrepreneurs. So what made you think, I want to be an entrepreneur?
Well, I think when I was at P&G, that was really not at all on my mind. I started to actually think of it as an attractive option at McKinsey during the year 2000, when you had the IT boom. And I think that was like the period of time when startups became really something very talked about. I had no idea how to become an entrepreneur. For me, it was something like impossible. And it just happened by itself because I was having my third kid. I was on maternity leave. I had moved to start the McKinsey office in south of Sweden. And that was also where we had settled down. During my maternity leave, McKinsey has actually decided not to open the office in south of Sweden. And so I was just thrown into the situation where I had to start my own company. So I started what I knew, what I could do. That was a consultancy company. I started building a consultancy firm with some ex-McKinseys and ex-P&Gs and specializing on helping pharmaceutical companies deploy global strategies behind blockbuster drugs. So that was really my focus for quite some time. And in parallel to this, it was very much like a coincidence, the different projects. So first I had this consultancy company, which was really my bread and butter. And then I was drawn into a project, which is a telecom company, where I started a telecom company. It was the first voice over IP, cloud-based in Sweden. We entered the market really like disruptors, because at that time, companies would have these very huge physical equipment for their switchboards. They would cost like several €100,000 when they had to change their equipment. And we came with a cloud-based service, which was €9 a month in subscriptions. So obviously that was quite successful. So I migrated over to this and spending my time building this company.
It's not everyone who sets up a telco company and then says, I want to start disrupting the jewelry business. So is it that you thought, I'm quite good at spotting areas, bits of industries that are ripe for disruption, and I kind of quite like that? Or was it more serendipity that you were in one project and then someone suggested, or you read something, or like, how did you think, you know what, A, I like being an entrepreneur, and B, what I want to do next is break into the jewelry industry?
Yeah, I think that actually I had one more step before I got into the jewelry business, and it was exactly the same thing, and I think it's a mixture between the serendipity and the deliberate move. It's really like in the gut feeling, where you can see that there is the innovation that it takes to succeed. And of course, with innovation comes disruption. The whole story with jewelry was more like a pastime. I went there on Sundays doing my own jewelry in a workshop. My sister told me, you should try to make a ring where you can change your stone yourself. And I said, okay, that sounds fun. So I invented simple mechanics to change the stone myself. And I was actually drawing these I was doing the drawings during my meetings for my other jobs. And so I made it. It worked. I patented it. The patent got approved. And that kind of kicked off my idea that I need to do a business around this. So I started producing this ring, and I developed the whole collection. I started a company, and I developed a collection with a producer in Italy. I signed a licensing deal, with the Tata Group for Indian, and then with the French brand for the rest of the world. And it's a French brand in Place Vendôme. And that connected me actually to Manuel Malène, who contacted me after that and asked me if I wanted to start Courbet. So it's a long road that goes in strange ways, but it's, I think, based on a lot of, the gut feeling of knowing where I think there are the components to succeed. And the components for me to succeed is it has to be innovative, it has to be doable, the timing has to be right. And I think for Courbet, the timing was just right. And for the Telebox company, it was just at the moment when the broadband was expanding across the country and we could just surf on the expansion of the broadband. Long story.
Yeah. So when attraction of jewelry, you set it out. How much was the ethical part of the consideration for you? Were you just very product driven? There's a gap in the market. I can see I want to create this product and I think this product can sell well. Or did you think it's more than product? There's actually around it, there are these ethical considerations that are also, I think, perhaps capturing a sort of shift in social values, shift in social priorities that also, I think, add to the product that perhaps make it a good time to disrupt what is a pretty competitive industry. It's not, and we'll get on to exactly what are lab-grown diamonds in a minute, but this is not a straightforward industry to break into in terms of product sourcing, distribution. So was it just product driven, or was it product actually plus ethical considerations as well?
For me, when I was contacted by Manuel and he was asking if I wanted to start this brand with him, with Courbet, I think I was at a state of mind where I had promised myself that I wouldn't do any more startups because it's such a roller coaster and it's so emotionally draining that even if it can end up very successful. It is very difficult. But it was the fact that it was just not just another great business idea. It was the whole value part, which attracted me. And I think it's because for personal reasons, first of all, I mean, I've for quite some time been preoccupied with the environmental issues that are kind of depressing. And it's great to be able to contribute some way. But when I was in contact with Manuel the first time, that was what I was excited about. The fact that it was meaningful. And of course, the combination of being doable, exciting, high potential, and meaningful was it's amazing. I think today, when we launched Courbet in 2018, we had no benchmark, no reference around us of other luxury brands that were positioned as sustainable. We talked with investors. They were asking us, could you compare? Could you give us a benchmark? Or do you have any other brands that you aspire to be like? And, in the luxury industry, the closest we could get was, Chopin had talked a little bit about ethical gold. You had Stella McCartney that had made this vegan leather, but that was more like animal cause. So what we at the time thought, because we didn't know at the time much about batteries, we thought, we want to be the Tesla of jewelry, because Tesla has been driving change. You already had electrical cars before Tesla came in. But what made, I think, them change the industry is that they came in with the same performance or even higher performance than other cars. Super cool design, very innovative control panels and way of controlling and opening the car doors. They really came in from above and they drove change. So that's what we said. We need to do that. We need to come in from the top. We need to be at Place Vendôme and be positioned high end and be innovative. Otherwise, we're not going to contribute to changing consumer behavior or even, producers' behavior.
Could you talk a bit? I'm not sure everyone will know what a lab-grown diamond is exactly, what that is, how it works, and then what are the benefits of that? You already mentioned kind of energy, but can you tell us what it is, what are the benefits, how long does it take, everything you need to know.
Okay, so a lab-grown diamond is a diamond. It's crystallized carbon atoms. They have crystallized through in the same way that the carbon atoms crystallize in Earth. You have two ways of doing that. You have the CVD process, which is chemical vapor deposition, and you have the HPHT process, which is high pressure, high temperature. So high pressure to high temperature, that's what's happening inside the Earth. Diamonds form inside the Earth through high pressure, high temperature, and it happened like billions of years ago, probably very quickly because, the temperature is very high and the pressure is very high. But it takes billions of years for the diamonds to walk their way up to the surface and get found. In the 1950s, General Electric and a Swedish company both discovered that you can actually replicate that process and do it in a laboratory. The first diamonds that were produced, they weren't very nice. They were a bit grayish. They were super expensive because of all the trials and errors and all the manpower and investments. But with time, technology has developed, and this second way of doing diamonds, the CVD process, which replicates how diamonds are actually created in space. So if you imagine that you have carbon atoms in space that have this negative pressure from the void and crystallize into diamonds, this is what happens with the CVD process. And this process has actually developed much more than the HPHD throughout the years. And I think 2011, when I was still in Sweden doing this interchangeable ring, I was looking into diamonds, seeing can I put a diamond into this ring where you can swap your own stone? And of course, I stumbled across what they call the synthetic diamonds. And they couldn't do the size that was required for the ring, which is 3 carats. At that time, you couldn't do 3-carat lab-grown diamonds. So you could only, I think the threshold was 1 carat. And so it wasn't really viable for engagement rings yet. It didn't really have the quality yet. Now it does. So now today you can have much larger diamonds done, a lot thanks to CVD, but also HPHT. So I think you have to think about a lab-grown diamond as if you were thinking about an ice cube, where you compare an ice cube to ice that you have taken from the surface of a frozen lake. It's exactly the same thing, but one has been kind of created through the same conditions, but the conditions have been created by humans. The process of creation is the same, but one has kind of been nudged by the humans while the other one happened spontaneously. It's basically atoms, carbon atoms. I think the difference is really our environmental impact and also the impact, the conditions in which they are grown. So mine diamonds, of course, have to be extracted. So they are extracted with the help of digging, and the digging is done with dynamites. And the holes that are created to dig up those diamonds are huge. You can compare the typical a hole of the mine itself would be the size of the first arrondissement of Paris, which is huge. And the whole infrastructure around it, which is mostly dust because you have to shave off a piece of land, the equivalent of 75% of Paris. And there you have your mine. And that mine is going to be exploited for 20 years. And after 20 years, the equivalent of half a bathtub of diamonds will have been extracted. So, of course, for us, seeing, okay, you can create those diamonds today, there's really no reason to dig. And then comes the question, yes, but you need a lot of energy when you create those diamonds. And that's true, but you can also choose what source of energy you use. And there's a lot of possibilities for reducing your carbon footprint with new alternative sources of energy. So there's a lot of room for innovation, where I think it's digging. You can't really circumvent that issue. I think today, the big difference between the two diamonds is the impact. You can't see a difference when you look at them. You can't see a difference with a 10x loop. Gemologists cannot see the difference. You can deduct the difference if you take the stone to a gemological institute and have them test it through 3 to 4 different machines, because there are different types of diamonds, and some of the diamonds from the mines are actually identical in their DNA to the lab-grown diamonds. You get to that point of similarity, there's really no reason to start from a product point of view to continue digging.
Yeah, well, look, it makes a compelling case for a product that maybe was the best example of scarcity of supply drives price and desirability, but now is being disrupted due to a substitute that is, according to what you're saying, as good. So therefore, what seemed like constrained supply, and maybe it was artificially constrained supply, but diamonds pricing must be reflecting demand versus supply. And if supply was constrained either deliberately or because it's just expensive and difficult to discover diamonds, and now you can make them in a laboratory, then that changes the whole supply equation. So that therefore is just very disruptive. And it's disruptive with strong environmental benefits, as you outlined. So I guess the obvious question is, well, just how disruptive is this to the traditional diamond industry, and kind of what happens next? Is this an expansion of the addressable market for diamonds? Does this make them more accessible? And does that increase the size of the market, or them becoming more accessible reduces their attraction to some people because they wanted them to be scarce?
I feel that there's like a Russian doll of questions in this question.
Yes. Well, yes, I guess.
It is, yeah. But I think, what happens now is that we are in the cradle of development of lab-grown diamonds. We are at the stage when lab-grown diamonds are trying or have successfully completely replicated what's happening in Earth. And you can see from it's sold as a diamond, and it's still mostly sold by goldsmiths and by jewelers who are producing what the consumer is asking them. So what you have is that traditionally, if you go to a jeweler, what you buy is the gold, it's the diamond, and it's the craftsmanship, and then the margin for the jeweler. If you go to a brand, you will buy the same things plus the brand image and innovation, because the brand invests in innovation. So you add two new components to your value proposition. And that kind of adds a new dimension into this whole development. It's not just about lab-grown diamonds versus mined diamonds. It's also branded versus non-branded jewelry. And the reason why that matters is because when you start to look for innovation, it means that you don't necessarily look for lab-grown diamonds to be the same. And we can already see that in brands, even brands that during Place Vendôme, I think they already talk about moving into lab-grown diamonds through a creativity and innovation perspective. So it's never going to be an ecological argument or even of course, not a pricing argument, but it's more about things you can do that you can't do with mined diamonds. And it opens fields of amazing and stunning creations that will cost a fortune. So you kind of out of that dimension of pricing and is this scarcity, etc. Because a brand is not necessarily about the raw material, but it's what you do with it. Coming back to your question about consumers, I think yes, the lab-grown diamonds opens up a market to a new market. It's people actually who would never ever buy diamond for sustainable reasons. When it comes to affordability, it doesn't really expand that much. Yes, but mined diamonds, you already had a low end in mined diamonds. You could go to the Leclerc supermarket and find super cheap mined diamond rings. When Lightbox launched, De Beers brand, when 6 years ago, they positioned themselves in the low end, but they were still more expensive than mined diamonds are at the low end. I think what happens is that people are trading up, and we can see it very clearly then when consumers are coming to Courbet and they can see that they can get like a 3-carat diamond for the price that they normally would buy a 1.5-carat diamond. They are not going to go, oh, I can do some saving here and buy a 1.5 carat and save some money for something else. They would trade up. And I think that's also why you would see the US market in lab-grown diamonds move completely to 2 to 4 carats in size. And I think it has to do with the fact that for engagement rings, there are some standards that are being set, and they have been kind of anchored with consumers that you have a guy that want to propose to his future wife has to kind of put up a certain number of months of salaries. which is horrible. But that's how it has been developing in the US. And I think it has come to Europe as well. So you won't kind of say, okay, I'm going to spend half a salary or one and a half salary now because I'm going to buy a lab grown diamond. No, they're going to go, I'm going to get an even bigger stone. And on top of that, it's going to be sustainable.
It's expanding the market. Overall, it's expanding the market.
I think it's expanding towards the segments that would normally not buy diamond to environmental reasons. I mean, today, the Gen Zs and the millennials, they are completely taken over the generation that was before. So they are the biggest consumer today. And the younger millennials and the Gen Zs, they are quite strongly preoccupied with the environment. And I think many of them would not buy a diamond if they couldn't buy a lab-grown diamond. And it depends, of course, of which geography we're talking about. I'm mostly talking about France now because that's where we are, where I think the youth is very eco-conscious.
You believe that people do want sustainable luxury, and diamonds are luxury goods. Of course, they range in price. So even though humans throughout the ages have signaled, I guess, they found things to signal wealth, they found things to sort of signal taste. That's perhaps arguably been some of the primary motivations in purchasing luxury goods, including jewelry. There are other aspects as well. Jewelry is very portable, for example. But you think there's enough of a social attitude change to introduce another sort of vector, which is sustainability, that actually and environmental footprint and ethical consideration. There's enough there, you think, to really see. We talked about expanding the market, but a market share shift. In this instance, we're talking about lab-grown diamonds, but you also use recycled materials like gold as well. You think that's enough of a social attitude shift to see market share change driven by these considerations?
I think that definitely has an impact. The same way that, if somebody comes with a fur coat today, you would look at that person going, is she completely unaware? Is she lacking education? It doesn't matter about how much money you have. It's about values. I think you see celebrities today showing values. It's something which is like, it becomes part of the luxury concept. I think that is at the heart of this transformation. However, it's going to reach a point when it's a given. You have several forces at work. One is, of course, the value driven. The other is that you have a short supply chain. So more efficiently, you're able to transfer the value created to the end consumer in a more efficient way. You have one or two steps from the production to the end users, whereas for mine diamonds, you can have up to 12 intermediaries. That's inefficient. You have a lot of intermediaries having their margins squeezed. Those intermediaries are actually, many of them, shifting over to lab-grown diamonds because they earn more money there. So that's helping the acceleration of the change. And I think that efficiency in the value chain makes it possible to acquire these diamonds at a more attractive price without giving up any whatsoever quality. It's not like you're going like, oh yeah, it costs less because, no, it costs less. There's no reason. It's simply because the value chain is more efficient. So I think that's a very, very strong driver of change. Then you have the being independent of a more or less oligopoly. You have an oligopoly, and it bothers many brands to have a dependency to that oligopoly. With lab-grown diamonds, they break this dependency. And then finally, you have the degree of innovation. So you have a greater span of innovation. You have today companies that are working on creating diamonds with the CVD technology that enables them to do whatever shape they want. So basically, you can have strings like hair made of diamond. As always, when you see disruption, you have many forces at work converging to kind of create this disruption. And I think what happens is that when a disruption comes away, you have an opportunity to enter the market and to change the dynamic of the markets, where typically for the diamond jewelry industry, it has been extremely, extremely conservative, very difficult to penetrate or to change. There were no major innovations. I think it's a very exciting period of time when everything's kind of up in the air and possible. You have a lot of new entrants. Consumers are changing their behaviors, and there's a lot of technological innovation. However, one should know that the threshold for entering the lab-grown diamond production business is high. It's not easy to become a producer. because the equipment is expensive to build. You don't buy off the shelf equipment that have the capacity that you need. You can buy small units, but if you want to be a real producer that can make the volumes required to actually be an actor, you have to build your own machines without trespassing on any patents. And you have a lot of patents out there.
I guess disruption happens when you have a change in technological capability. And I think sometimes it also happens when you have a change in demand driven by societal attitudes. So I think it's pretty interesting what is potentially already happening and potentially may well happen in this part of the industry. Do you, when you think about other disruptive areas, that the idea of recycling material will lead to either, I guess, better profitability and or a clear consumer preference for recycled things? So, well, your business also recycles gold, but other materials as well. You're seeing that more prominent, whether that is in apparel, whether it's other areas. There's a concerted effort to make more prominent recycling materials, that sort of circular economy idea. Do you think this is something that will just become more and more important in 5 years' time, in 10 years' time? That clearly this is what consumers want, and this will drive consumer preferences, purchasing habits, and therefore market shares?
Yeah, I've been thinking a lot about, what happens with the perception of luxury, what is luxury? And I think that luxury was quite different before year 2000. Beginning of year 2000 and the 1990s, it became simple. You just needed to have the right brand on you. Everything became very branded. A handbag, everything had the logos on it. And you just had to have the right logo on it, on yourself. And then you had luxury on yourself. And so today, I think people are a bit tired of that way of showing luxury with things that you attach to yourself or things that you own. But luxury is kind of becoming more of a style of choice behavior, of course, linked to money as always, because that's one way to make it unreachable and scarce. But it's a little bit like luxury has developed to become, yes, all those brands and everything that's given. Now let's look at what you do with it.
I guess the question then is, thinking about this through an investing lens, whether the incumbents in the industry adapt, so when it comes to diamonds, do they just start developing labs to grow diamonds and just use that as a different source of supply, but still retain their distribution power? And whether you're talking about fashion, whether you just see a pivot, which has already been happening towards more ethically sound sourced materials, or whether this is generally disruptive and it really does shift market share. So do you think for you in the jewelry business, the incumbents will respond and therefore the sort of status quo will prevail? Or do you think this is generally disruptive in a way that it makes it difficult for the incumbents to respond, whether that is broader jewelry, whether that is diamonds? Do you think that the big guys big guys, they just respond, or in fact, have they lost ground because new entrants like yourselves have not only changed the supply side, but you've also changed the nature of the product by this emphasis on ethical sourcing?
The incumbents in this case have such powerful brand names. I don't think that they are in any way in any danger. I think they will take a very reactive position simply because it's not their positioning and they have nothing to gain from being proactive. I worked at P&G, that was like back in the time, on Pampers, and suddenly there was this whole awareness around the bleaching process of Pampers, and that was considered to be bad for the environment and bad for the baby's skin. I was in Sweden at that time, and it was kind of noticed in Sweden, and it started to become an issue. I was in contact with P&G headquarters, and they said there's no way we're going to change our bleaching process. And this issue continued to the point where sales were hampered or threatened to decrease. And that was the trigger for change for them. They sent a whole delegation up to Sweden. They negotiated a new bleaching process with their key supplier. The whole thing were changed to become compatible environmentally. And I was in this whole process, and I really made a note that there's no way they're going to have a proactive position in this change process. And now for the brands in jewelry business, in addition to what P&G have, they have a strong brand name. P&G is kind of not working with their brand name. They work with their product names. And we know that they have already told, we have one of the big brands in our capital. And they have said, that they're going to be moving if the market moves, and they are going to be moving through the angle of creativity. What they can do, is that they can buy brands. So they secure their future. LVMH, as you know LVMH, they have already invested in lab-grown diamond production. Take De Beers, for example. They have been protecting their mine diamonds since the beginning of mine diamonds and protecting prices through controlling, supply. And now they are one of the biggest producers of lab-grown diamonds, and they are one of the bigger holders of patents. And so I think that it's just that we're going to see a shift of the game to a new playboard, where it's going to be controlled not via stocks or so. It's going to be controlled via patents.
Yeah. I think what happens in your part of the industry is going to have interesting read across and lessons for other industries where things are previously scarce. A change in supply, change in technology allows that. But I think this shift in values that drives purchasing decisions can be really quite disruptive. So it was great to have you on the show talking about an industry we haven't discussed on the podcast so far. We've talked about lots of industries, lots of things, but we have not talked specifically around luxury and jewelry before. So thank you very much for taking the time to come on.
Well, thank you. It was very nice questions.
Thank you for listening to today's episode of The Active Share. The Active Share is available on iTunes, TuneIn, and Spotify. And if you'd like, please leave us a review. To hear additional insights from William Blair Investment Management, visit us at active.williamblair.com and follow us on Instagram at WilliamBlairIM.
This content is for informational and educational purposes only and is not intended as investment advice or a recommendation to buy or sell any security or to adopt any investment strategy. Investment advice and recommendations can be provided only after careful consideration of investors' objectives, guidelines, and restrictions. The views and opinions expressed are those of the speakers as of the date of this recording, are subject to change without notice as economic and market conditions dictate, and may not reflect the views and opinions of other investment teams within William Blair Investment Management. Factual information has been obtained from sources we believe to be reliable, but its accuracy, completeness, or interpretation cannot be guaranteed. Any discussion of particular topics is not meant to be comprehensive and may be subject to change. This material may include forecasts, estimates, outlooks, projections, and other forward-looking statements. Due to a variety of factors, actual events may differ significantly from those presented. Past performance is not indicative of future results. Investing involves risk, including the possible loss of principal. Any investment or strategy mentioned herein may not be suitable for every investor. References to specific companies are for illustrative purposes only and should not be construed as investment advice or a recommendation to buy or sell any security. William Blair Investment Management may or may not own any securities of the companies referenced. It should not be assumed that any investment in the companies referenced was or will be profitable.